For the third straight meeting, the Fed is not raising rates, and the markets are responding favorably to that decision. We'll be discussing the latest from the FOMC, Jay Powell's presser, and much more today on Money Never Sleeps. Welcome back, everybody. Before we get going today, do us a favor, hit that like button, subscribe to the channel. Nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, we just got done listening to most of Jerome Powell's press conference. Nothing new there. It was the same lines over and over. We're going to be looking at the totality of the data, and we have our dual mandate to get inflation at 2% without, spiking unemployment, blah, blah, blah. What was your biggest takeaway from that? And do you think that he was as bullish, dovish, whatever term you want to use, as the markets appear? Because since he started speaking, we saw TradFi take a little bit of a leg up. We saw crypto move back up. Bitcoin is in mid 42Ks. It almost touched 43. ETH is around 2250. So are you as bullish on what Jay Powell said today as the markets are?
No, not at all. I think Jerome Powell is more cautiously dovish. That would be my assessment of what he had said. He alluded to a lot of things that we've been talking about on the show, things that, obviously are extremely important. Right at the end, we caught him talk about the reverse repo and how that's draining. That's something that you don't necessarily want to see for equities to continue going up. So that's something that we need to keep an eye on. He also said that we haven't seen a recession yet, but we could be one next year. So he's very cautious right now. I think he's
the term. I wrote this down because I wanted to get the quote right. A meaningful probability that there will be a recession in the next year is what he said.
Yeah, exactly. And I think there's a lot of signs there that he's telling you that, look, inflation's coming down, but it might be coming down faster than we want. I mean, the one question, I forget what it was how early do we need to be cutting rates if we're getting close to that 2% terminal rate or not terminal rate, but the inflation rate. And it's got to be before, otherwise we're going to overshoot it, right? That's the one thing he did say. We are coming down pretty fast. I think that whatever the CPI data starts to look like in January, if it comes in a lot cooler than maybe markets are anticipating, there's a good chance that they could start cutting rates fairly soon.
I mean, we did see real quick on that note before we move on from it. There was PPI data today, which is being overshadowed from the presser. And the data backs up what you just said there along the lines of it coming down faster. We saw the headline PPI number come in at 0. Expectation was for a 0.1% increase. The core number at 0.1, also under expectation. The PPI year over year is under 1% now at 0.9. And the core PPI year over year is at 2.5%, down from 2.8% last month. So to your point there real quick, we are starting to see that, which is, if they can time this right, is a good thing. Hopefully it means that we can get back to, a better, normal soon. But have they waited? That's all still to be determined.
Yeah, I mean, even to that point, we got the UK data last night for their inflation, and it came down faster than they anticipated. So we're starting to see kind of like this disinflation just from rates being elevated, both here and global and other places in the world that raised extremely fast post 2021. But he also mentioned, what did he say that was really important too? Oh man, I just forgot it. But damn, completely brain fart. But he had said something that was really interesting. If I remember it, I'll bring it back up. But yeah, that's pretty much the sentiment that I got from Powell, right? I think he kind of acknowledges that. Oh no, that's what it was. Core inflation being so sticky. I mean, he just kind of like acknowledged it and then he kind of brushed it off. But again, we do know that that's important. He says that they've been seeing progress with it coming down, and then he just kind of backtracked and said, but it's also been extremely sticky as of recent. So I think that's going to be really problematic for them going forward. I think that's the reason why they won't ever get that core inflation down unless demand absolutely drops in some of those sectors where it's going to impact core inflation the most. And part of that might just be cutting rates, to be honest, that will bring that down. But it's not going to be the way that maybe markets want it to be, that core inflation comes down. Might be bad reasons.
he kind of made fun of consumers a little bit. I don't know if you
He
caught
did.
it, where he
Yeah.
was talking about how, like, I don't know where people are storing all this stuff. Like when it comes to like people spending and the amount of goods that they're buying. I think Powell views most consumers like they're total morons because they buy so much shit, buy now, pay later, all that stuff. I thought that was a funny, that was him. That was Jerome Powell's version of making a joke, which, very hard to find the joke in that whole thing, but it is what it is. I thought it was interesting. I will say, looking at the calendar for the rest of this month, feels like we're set up to rally through the end of the year. Like there's really nothing else on the docket. We'll get PCE at the very end of the month, or actually, no, that comes out next Friday. So maybe we rally through the end of the year. If we get a good PCE reading, all bets are off. I'm looking at we can go through real quick and see what the market is now pricing in as far as rates go. So next month, in the January 31st meeting, probability of a pause is at 82%. Probability of a hike is at 4.3, and probability of a cut is at 13.7. If we look ahead to March, we'll go through the first few meetings of next year. There is a 25% chance that it's still at this rate now, and about 75% chance that it's going to be 1 to 2 rate hikes. And then by May, it's like all but guaranteed that we are going to be cutting rates. And this, they said before Jerome Powell spoke that they're anticipating 3 rate hikes or 3 rate cuts next year. Meanwhile, the market's pricing in like 5 or 6, and so
They never listen.
Yeah, they never do. We have 8 meetings next year. We're seeing at this point that by December of 2024, they have it all the way out there. The markets are pricing in that the rates will be sub 4. The odds are they'll be sub 4%, which is that'd be a big move down. So I don't know. I don't know if I believe that. Like the Fed has been pretty straightforward with what they're going to do, and in my view, like we've discussed previously, if it is more than 3 rate cuts next year, it is because something has gone horribly wrong.
Yeah, I mean, I think it was back in September. I kind of alluded to the fact I think within the next 6 months we would start to see rates start to come down, and that would probably be because something bad is happening. We haven't gotten any black swan events. There are a lot of issues globally. We know that. I mean, as we're talking right now, the Japanese yen is absolutely, gaining strength against the US dollar. I think a lot of people think that's bullish for equities, but then we remember that the yen carry trade could cause people to pull out of the markets in the US, and that could definitely kill treasuries. So there's a lot of things that could impact when we get that first rate cut. I mean, I think a conservative rate cut would probably come in May. I think those numbers 100% make sense. I think it's even possible to say that we see one in March. I think that March we could potentially see a rate cut. I'll take that as my 6 month. The 6 month literally would be that March we do get a rate cut, but I'm not close to the idea of anything bad happening in January as well, because I believe that's later in January that the FOMC meeting is.
The 31st. So
Yeah,
we'll have PCE later this month, and then we'll have another full month of data before they make their next decision.
And we'll probably have a lot of Q1 earnings, which if we want to talk about Q1, what we're anticipating from what happened in Q4, when we get Q4 earnings in Q1, when we get those, there's a lot of things that might not be as great as people are anticipating. And I think we're seeing a lot of signs of that right now. But I mean, just for example, we just saw that Hasbro is laying off a ton of people, and we found out why they're laying off a ton of people. Going into the holiday months, they haven't seen a ton of demand for toys, which is a wild statement for them to be saying, because going into the holidays, when you're in a market where that the people are absolutely resilient, they're not actually buying things that you would anticipate being some of the higher end purchases made for kids and stuff like that. That's a pretty bold statement we're seeing there. So I think we're going to get some bad demand going into Q1 from Q4 earnings. And I also think that the CPI is probably going to cool a lot faster because we're not going to see as much demand this holiday season. I think seasonality is going to play some effect. I just don't think it's going to be as hot as people are anticipating. I don't think that this has been a great holiday season, and we're going to get those numbers, obviously in January. So that could definitely impact the Fed if they see things cool down too fast. Definitely can impact maybe a rate cut in January, even in March or so.
Okay. What else from the presser or the meeting do you want to talk about? That was pretty much everything I had taken notes on. It was the same old runaround. Like they're not going to give too much information. He's not going to tip his hand. It did seem like to me, there wasn't a hawkish moment in that entire thing. It seemed pretty much like he said they weren't going to declare victory yet.
Kind of did.
You could see inflation come down without huge job losses, too early to declare victory, blah, blah, blah. Yeah, he kind of did. Like it seemed that way. Like he is sitting there ready to take his victory lap, which if they can pull this off, they deserve it. Remains to be seen. Like I said, markets are responding well at this point. We see actually they're starting to pull back a little bit. All the major indexes were up over 1%, and now they are all a little bit below that. So we are seeing a little bit of the market giving some of those gains back. But yeah, why don't you go ahead and pull those up? We can take a look.
Yeah, I mean, again, this is a 3-day, but we saw that they were much higher. I think the S&P was up like 60 points on the day. You can see that it wicked down from the trend line in the middle, this massive bear flag. Again, looks like it's finding resistance right there. NASDAQ, if we take a look at this, and also just taking a look at this on the S&P, we're once again overbought. And we could see that when we had this move to the downside here, which was literally 1 day of red candle that we got back in December, about a week ago, that pretty much sent everything to oversold, and we rallied really fast to overbought. So we can definitely see that the momentum to the upside is also very volatile, is equally as volatile as to the downside. It's going to be really interesting to see how this plays out, because if this starts to come down faster than we anticipate on the stochastic RSI, and the price is actually coming down, maybe trying to fill the bottom of the gaps, maybe even touch this level down here, then we could probably see that this, I would say the short-term move of December is, not sustainable whatsoever, and eventually it will be retested. But we also need to see how this plays going into the end of the year, because that's going to be really interesting. There isn't a lot to stop this market other than black swans, I think, at this point, or just maybe positioning going into 2024. So that's something that we need to keep in mind. NASDAQ, obviously, I mean, this thing just keeps going. It's getting close to all-time highs, right? We're 16,774 is what we need to be, about 300 points away from there. So could we get there? Could we get a double top? Could we push up all the way and get an all-time high? I think it's possible. It's kind of a messed up thing to say, but it's possible. And the last time, I just want to go back to here, because we do know that we talk about right now NASDAQ and tech being 100% a bubble. We take a look at where we were back in 1999. We had a high here, good dump, and then it rallied into an all-time high. Right when we got to the all-time high, that's when the recession started. So just things to keep in mind when we look at the NASDAQ, because I think the NASDAQ 100% is the biggest bubble out of all the major indexes. Don't get me wrong. I think everything kind of is a bubble. But when you look at all those compared to the small caps still are not performing nearly as well as, the top 7 and a lot of these other big companies that just have not seen much downside price momentum at all. Let's pull up Bollinger Bands on the daily. Looks like their jaws are closing in fairly tight here. You can see that they're coming in. Maybe we get a rejection from there. Eventually, we are going to see another move to either the upside or the downside. Remains to be seen. Look at the Dow. Yeah, these jaws are closing up once again. Nothing too crazy here. Again, just in this parallel channel, broke out of it. Looks like it double topped perfectly with where we were in December 2022. So the Dow, actually, Dow might have put in an all-time high. Am I tweaking here? No, it did. Wow.
Oh, wow.
Well, quietly, right? But I mean, it's been up 300-400 points every day for like over a month. So I mean, what are we? It's not surprising that it did do that, but it's that's not a good sign. And here's the thing: I think they're not going to raise rates anymore. I think he was full of shit when he said that there's a potential raising rates. That's not going to happen. That's between, I guess, you, me, and everyone else that watches the show. But I think with this, they're saying, yeah, we're pivoting at this point. We're looking to cut rates in the future. This could be very close to a top signal, in my opinion, or at least a plateau signal before we start to see anything else happen. So yeah, we could rally to the end of the year, and then maybe when they first cut rates, that could be the absolute top, or maybe in the beginning of technical recession, whatever we want to do or call it. But yeah, I mean, this is not necessarily a great sign knowing how bad the macroeconomic outlook is, and we just double topped, even put in an all-time high today. So very, very concerning across the board with the major indexes. Pulling back a little bit, yes, but I think that we're getting extremely frothy up here. And the last thing I'll talk about before we get into something else is this guy right here, the VIX. I mean, the VIX is at 2020 lows. That the VIX is insurance against volatility, and nobody's betting that it's going to go up. Everyone's betting against it. And with people betting against it, we do know that all it needs is the VIX to pump up a little bit. So say S&P starts to drop maybe 100, 200 points or so going into the beginning of the year. This thing starts to go up from 12 to say 15. Now we know that a lot of people who are shorting have to cover those shorts, so they start buying VIX. That starts going up. It's a short squeeze that pretty much could lead us into the 20s, into the 30s, and nothing could necessarily break at that point. It could just be a healthy correction, but there's so many people that are overweight in this trade that it could blow up in their face. So I think that's something we also need to keep an eye on. And it's really funny to see that, we're below this 1271 level. We also filled a gap that was here from the pandemic. So seems like the market is tending to fill gaps. I think there's a lot of gaps in the major indexes as well. So we have to see if those get filled at some point. But for the ones that are bearish, the VIX, clearly they filled all those gaps to the downside. So that's pretty interesting stuff that no one's talking about.
Entering a short on this now just feels like such a terrible, like, yes, it can go lower. It has gone lower. From what I can see, the lowest we've seen the VIX is like the high eights.
Yep.
Mid eights. And so, yeah, there's room to the downside, but like if you're entering this now, you may be a little too late there and you're putting yourself in a bad situation.
Oh, absolutely. I actually shorted the SVIXy, which is shorting what people are shorting the VIX with. And the reason I'm doing that, I could go long and make money that way, but I do know that if we do get the short squeeze, it's kind of guaranteed that they are going to have to cover their positions, meaning they'd have to sell their positions, brings that down, hopefully make some money in the process. I have a short term, so March 15th, I think, is when the contract expires, but we'd have to see how that plays out. But I think that, yeah, it seems like the VIX can only go up from here. It could go down a few more points, yeah, but it also seems like there's so much upside potential, and then we know that rates are being cut. If we even look back in the past, we tend to see these spikes right when rates are about to be cut or they are cut. So that's just something to keep in mind looking at that. Other thing that we can take a look at real quick is just the bond market. These yields are absolutely eating shit today. And we can see that everything just fell off a cliff. It looks like we're going to get a death cross. It's not guaranteed, but this is just the 1 year. You can see that's down about 3.5%. The 2 years down huge, 5.6%. So that's kind of what we want to see, right? We want to see that yield curve uninvert because that tells us that, okay, maybe this is the top of the market. This is giving us signs that we could be heading into a recession. I'm not saying that's a good thing. I'm just saying we need a little bit of clarity because it seems very ambiguous where we exactly are right now, despite how much everything really is kind of alluding to the fact that demand is drying up. The oil market obviously is a huge sign of that, but 5 years down 5.24%, 7 years down 4.76%. I mean, the 10 years down almost 4%, and then 2.67 for the 30 year. So these are all below the 200 EMAs. If they continue to go down here, that's a very dangerous place for, I think, equities, because it shows you that people are locking in these yields ahead of next year, knowing that they're going to cut rates and they're getting these guaranteed, before today, it's even some treasury bills and some treasuries were, 5%. So this is kind of easy money for some people in the money market. Eventually it's not going to be as easy. The yields are going to come down because the rates are coming down. And I think a lot of people are going to realize that's not necessarily bullish for your equities.
Okay. Let's just kind of briefly go through a little bit of the crypto market, and then we can call it a day. What is catching your eye there? Like I said, everything's pumping a little bit. AVAX is having another big day. Solana is back into the 70s. I mean, it is it's rally time over here in crypto land.
100%. How could it not be? They just pivoted pretty much. Let's go here and see the coin. We're going to go to CoinGlass and see what the funding rates look like. Very neutral for the most part. I think there are some shorts. It's funny to see shorts building up on Binance. So that might be the exchange just kind of trying to liquidate anyone who is holding any positions on there. I don't necessarily think Binance is buying any more BNB at this point, unless, chaos is ensuing. But across the board, we can see everything is pretty neutral or positive. Obviously, deep red, we don't like to see. That means that there could be a sell-off coming soon. And if we start to see some of this green, it means there probably is a good chance for another squeeze. See that a lot of people are shorting AVAX on OKX. Possibility can go up a little bit higher, and across the board everything else is pretty neutral or red. So I'm not too concerned with some of these funding rates. Now the thing that's going to give us a better idea of what could happen moving forward is probably the liquidation map, and we're just going to look at Bitcoin and Ethereum. I think those are the two big ones, but we can see here we're currently at 42.7 or so on the Bitcoin's price. There is a good amount of liquidations here because a lot of people were shorting Bitcoin right when it was getting around 40K. Right. So that tells me that there is a chance that we could see Bitcoin shoot up once again, maybe put in a little bit of a higher high, or we could find a lower high or double top. I think those literally are the only solutions we could see if we are pushing Bitcoin's price up and we want to take some of these liquidations off the table. I would say somewhere I think I had it on the chart over here. I think 45.5 was a level that I was looking at. And if we look here where 45.5 is, that's roughly 4 billion or so worth of short liquidations. So if it goes here, it's about $4 billion worth of shorts that could be out of the market, that could lose. And then obviously we push down further here. We're looking at 3.47. So it makes a lot more sense for the price to push up than to push down if we are in liquidation season. So could Bitcoin pump again? I mean, it kind of is already right now. I think that it's very possible. And again, if we, move over to TradingView real quick, we can take a look at where all the stochastic RSIs are lining up. It's nothing too crazy, but everything is oversold. So yeah, we could see another push up higher. Like I said, either a double top or pushing up towards that 45, 46 level. I think that's very possible. Eventually, we are going to run out of steam because once we look at this on the weekly, I mean, weekly stochastic RSI is still 100 and 100, and the monthly is 190. So it seems like we're going to end this month for the most part on a positive note for crypto and Bitcoin. So I'm pushing up a little bit higher into the end of the year wouldn't surprise me. Maybe things change a little bit more in positioning come 2024. Let's take a look at ETH. Nothing too crazy. It's up $50 today. I mean, at this point, $50 doesn't seem like a lot because there's just so much money that's piled into ETH and some of these other assets that, okay, it's what, 2%? Doesn't seem like a lot. It seemed like a lot when we were back in like the 1600s, but yeah, I mean, everything seems to be bouncing right now, right? That's the thing. And this could also be a situation where we could be heading into 5 waves down, or, a corrective pattern down. It seems like everything's bouncing, everything's oversold. So we could push up a little bit higher from all of this. Taking a look at some of these other ones, let's take a look at total market cap. Seems like we got that top up here. Let me move this here, and then we're bouncing. This could just be a correction. Again, we want to see how the stochastic RSI does correct here. If it starts to stay oversold for a period of time and the price continues to push up, probably a good chance that this move has a lot of strength to it. But we have to see how that plays out. Don't think we're going to get our answers anytime soon. And just in my personal opinion, I think we're going to have to wait and see maybe about a week or so to see how things are definitely lining up in this market. AVAX. Yeah, I mean, shot all the way up to 42 again. That's 42 from yesterday, and then it's at around 40.75. I mean, everything just kind of reacting I think the crypto market's a little bit lackluster compared to some of what's going on in TradFi. I don't necessarily think this is anything to be getting excited about, but just across the board, get out of crypto for a second. Everything that's kind of oversold is bouncing here. Gold obviously is bouncing. We expect that there would be a little bit of a bounce here. Let's take a look at oil. Oil bouncing very minutely. I'm not even concerned that that's going to keep pushing up from here. But what else did I have? I think it was the DXY. Yeah, DXY, looking at this, it was overbought. It had to come down for a correction. It's doing that. Everything in the short-term time frame seems like it's doing exactly what it should be doing going into the end of the year based off the technicals. But again, we know that everything going into the macro and the weekly and stuff like that is a very different story looking forward into the next year, right? So it's something that we do have to keep an eye on. I think there was one other thing I wanted to take a look at. Oh, yeah. Take a look at the Japanese yen right across here. You can see that it's coming down significantly and crazy right here. A lot of people are expecting the yen to just continue to grow against the dollar. Now, here's the thing that we need to talk about. And we talked about this, I think, back in late August, early September, was the yen carry trade. If this thing unwinds, this is not bullish for equities one bit. Like I was saying, that's going to absolutely destroy the U.S. because a lot of people had money in the U.S. because they feel like that's the last safe haven. It's the last place in the world where the markets are going up. They're going to pull that out and they're going to just invest in their own country. Obviously, that'd be Japan. We know that Japan has the most amount of U.S. debt. I would say that is very complicated, and that's going to definitely impact the U.S. It's going to impact the bond market. You could see a bit of a squeeze on the bond market at that point. You could see a lot of, I would say, uncertainty, which could impact gold price as well moving forward into the equity market. So it's really interesting seeing what's happening in Japan. I think tonight's going to be really interesting watching what happens with Japan. But I'm not convinced that equities, for the most part, are in a bull market. I think we're getting close to an actual top. And that might be controversial to say because I've been saying it for so long, but it just seems like a lot of things are lining up to the fact where people are positioning themselves for rate cuts. And that's not necessarily what markets who are unaware of what's coming want to be, surprised by going into 2024.
Yeah, we've seen time and again that when the rate cuts happen and when the pivot actually happens, it is a sell the news kind of a situation. So just something to keep in mind there. I've been seeing more and more articles like you're getting 5% on your cash. Is it time to pull that out and put it somewhere else? And I'm just like, no, I don't think so. I'm still sitting with cash getting 5%, and I'm happy to do so for the coming months until we start to see that pivot actually happen and the rates come down and a correction in the market. So just my humble opinion and what I am doing right now with the cash I have on hand.
Most definitely. And I just want to end this with this because this is something no one is talking about. Happened today. They were Country Garden. We know that Evergrande next month, they're going to have that liquidation hearing coming. I think it's January 29th. They delayed it till January to the beginning of the next year. Now, Country Garden was supposed to pretty much default on a yuan bond today, and all the holders chose not to seek payment. And there's a reason why they chose not to seek payment, because they know that if it does get to liquidation, a lot of the assets there on those balance sheets of Country Garden likely to be a lot cheaper than they genuinely expect, and that would absolutely cause catastrophe both in the Chinese property market and also the banking sector in Japan and China. But Japan obviously also has exposure to all this too. But seeing this just tells me that people are so scared of what's to come that they're willing to kind of like, okay, we'll give you guys another 30 days. Hope you guys can somehow magically come up with all this money. I don't necessarily think it's going to play out that way. I do think we are going to see a fire sale or something is going to break where they can kind of let this happen. The scary thing is if those assets start to devalue from other people selling off before they can get to the fire sale, to the liquidation hearing, and they actually liquidate the assets, then they're not going to want to lose even more than what they're already are going to lose, right? This is part of the liquidity crisis that we are kind of anticipating. I'm going to be following this like a hawk because nowhere in the mainstream news is talking about this. We're talking about rate cuts. We're talking about a soft landing. This isn't a soft landing. This is a game of Jenga, and this tower is ready to topple. And this goes between Country Garden and Evergrande. Both of those next month. There's going to be huge news around those, in my opinion. So keep an eye on this shit because this could absolutely topple pretty soon.
We are pumping heading into the close. S&P back over 4,700. Dow is over 37K now. So going to close at an all-time high. It looks like. Oh baby, watch out! The Santa rally is a thing this year. It will rally into the first part of into early January, and it's anyone's guess from there. But we have our idea of where things are headed. Appreciate everybody for watching today. We'll be back tomorrow at our usual time. Do us a favor if you haven't yet. Like, subscribe, drop a comment, share us out if you think that what we do is halfway decent. It's greatly appreciated. But thank you for joining us today, everybody. Stay safe out there, and we will see you next time.
Take care, everyone.